All right, traders. This is Blake. I still am. I'm like in shocked. Uh, I'm just, hold on a second. I'm dying over here. I pissed myself. Oh, you know what? This is it's awesome. I can't. I can't. Uh, oh man. Woo. All right. Okay. Uh, Daniel said, what did I TradeWorks do to get blocked by you? Just curious. Oh, you know what, Daniel? I'll unblock you. I thought you were somebody else. Um, all right. Anyway, okay. It's time to get to business. That was funny though. I mean, I wish people knew that I just really don't care. Like I don't care what other people say. You know what I mean? I really just don't. I really don't care what people like tweet and other charts. I really don't care. Anyway, and if somebody, you guys know, I'm one of those people. If somebody puts out a chart that if somebody if somebody now I am really laughing. All right. Anyway, um, dude, this is too funny. Oh my God, it's too funny. So for this is a good morning. Hey, Daniel, I really thought you were somebody else. Can you email me, Daniel, so I don't forget? Because I will forget. Can you do that for me, Daniel? Okay, it's right here. Here, just let me copy that and let me put it over here. There you go. Okay. Oh my God. All right. Sorry, I'm having all sorts of laughs this morning. It's good for a Friday. Okay, we got to get started. Let's go ahead and let's go ahead and get to this. Okay, let's see. Let's get over to the charts. Hold on, really quick. All right. Anyway,
What happened, Blake? Or what's so funny?
dude, some guy. Okay. So some guy posted a chart, or apparently posted a chart. I posted a chart in gold. I mean, you got to see this chart in gold. Okay, this is probably the most. I had this for like days. Okay, actually, I posted it 3 days ago. So we have a weekly chart in gold, and we have a 38% retracement, fib
Yep.
and trend line. Most basic. Uh, most basic analysis you could possibly do. You couldn't even like I mean, I don't know if you could do more basic technical analysis. And I sent this chart out 3 days ago. So I tweeted out this morning. I'm like, hey, ahead of NFP, we really got to watch this because if gold breaks 1400, the dollar's going to get slaughtered. It just
Right.
will. That's like a number one on my screen today, no doubt about it. Okay. And so this is one of those situations that if gold breaks above 1400, the dollar's just going to get killed. So I reposted the chart this morning that I did 3 days ago,
Yeah.
and some guy said, "You're copying my charts. You're blocked." And I'm like,
What?
I'm like, this is. It's not like I'm doing anything special. This is like the most
Right.
basic stuff in the world. Anyway, some guy that's obviously on a high horse and thinks that everybody's stealing.
He's the only one that knows how to draw that line.
Right, and the fib, which, by the way, if there's anybody that uses fibs, I've been using them since I first started in the business. Like in the 90, when I first started trading in 96, the first thing I learned, actually the first thing I learned was trend lines. Second thing I learned was Fibonacci's. So probably before this guy was even, he was probably like, you know, like popping pimples on his face when I was learning this stuff,
Right.
or maybe playing with his Star Wars action figures or something. I mean, it's like this is the most basic analysis that everybody on this webinar knows that I do on a daily basis. So anyway, that's it. But Kip, I got to get back to analysis because this is it's silly. I spent way too much time on this.
Okay. All right.
All right, but okay. Talk to you later. All right. So guys, so here we are. Let's talk about the euro dollar and let's talk about what we've got here. So the sorry, you guys are killing me, man. You guys are sending some funny stuff, and I can't. You guys have to stop because it's like it's I can't focus. All right, so here's the euro dollar. We got the ABCD. We all know that's right there. And so we've basically all we've done is we've rallied to previous support, which is now current resistance. Okay, so let's get that out of here. All right, so we're there. Now the question is, notice where we stopped. I mean, we drew this out yesterday before it happened, right? We were here yesterday. We're like, hey, we're probably going to find some support down here at 111.20. We hit 111.20, and now we're hitting previous support. I mean, look at how well we're contained. Now, I don't know. I don't know if. I mean, if it wasn't non-farm payroll, if it was, Paula, you're killing me. If it wasn't non-farm payroll, I would actually short the euro right now. If it wasn't non-farm payroll, okay. It is, but because it is non-farm payroll, I don't want to just start shorting the euro dollar just for giggles right at these prices, okay. So and it's also a 38% retracement. Look, I'm using a fib. Oh, I think it's what I use every day, all the time. Anyway, we're at a 38% retracement right now. Let's imagine we have a weak number. All right, if we have a weak number, we should spike up to 111.90. Why? That is the 618. It's also, let's go back over to the daily chart. You remember how big this number was last week, and when we broke above that 111.90, that's going to be a big number again on the way back up. All right, so 111.90 will be right here. And I think we have the potential to get there today. It is the 618 retracement. It was a big number before, so let's mark it. Now, like I said earlier to Paul, and this is we had. Hey, what was the support we wrote down yesterday? Thomas, can you delete my RSI from your chart, please? No, it's my RSI. I copied it from you. It's now mine. It's my RSI with the factory installed settings. Okay, so what did I write down yesterday for support? 111.90. That was the 110.90. I'm sorry, that was the 50% retracement. All right, so what we did is we actually found support here, which I think is going to be a big deal on the way back down. Well, actually, you know what? Even if we push to new lows, let's say Paul is right. Okay. Um, um, let's say Paul is right, and we get a strong number. Okay. Okay, and we do this. That's probably not a bad place to take profits, because Paul was like, hey, on a strong number, I would fade that. That's probably not a bad idea. Okay. That's probably not a bad idea. So let's go over to, let's just write that down as 110.90. I got to get through this analysis, guys. All right. So anyway, it is still bearish. Well, we are below 112. We're below 112.50. Remember, it's still bearish. I mean, we're bouncing around all around here, but ultimately, if you look at the daily and weekly charts, you know, we are below. As long as we're below this yellow trend line here, it is still bearish. All right, and remember we did have that ABCD completion, so any move above 112 is probably a short. All right, let's take a look at the cable. All right. Now, I am short the pound, and I'm short at 69. So I'm actually out of the money a few pips, just so you know. Question you're probably going to ask me, hey, Blake, you going to hold this through NFP? I am. I mean, I do have my stops above 132, though. All right. Remember, we're coming right back into the sell zone that we talked about yesterday. We're coming right back in there. What is this? What is this? Oh, never mind. I know what that is. Okay, let me get rid of that. Let me get rid of this. We don't need that for right now. That's not a concern. So what we're doing is we are bouncing back. What is all this junk? Let me get rid of all this stuff. What is all this stuff? Oh, I was drawing in just in case we hit new lows yesterday below 131. I remember doing the Lunch Money webinar. That's what we're talking about. Okay, so let's think where our retracement might be here. So if we get a retracement, a 38% retracement takes us up to 132.04. So 132.05 is resistance. Okay. It is bearish. It is bearish while we're below this blue trend line. Okay. While we're below that blue trend line, it's still bearish. All right. It's just all we're doing is we're backing up right now. I know it's hard to say that, and it's even hard for me to say that as I'm short, and I'm actually out of the money 4 pips, and I was in the money like 60 pips overnight. So, you know, and I'm still sitting in my trade. It's not like I've done anything different with it. But the thing is as we are below 132, it is still bearish. Okay. Now let's go over to the all right, let's go over to yeah, Nick says, are you going to hold cable short in NFP, Blake, with a hedge, question mark? No hedge. Probably should have a hedge, but I can't reasonably want to buy the pound anywhere. You know what I mean? It's like I have my stops in. I don't have to go into NFP with a hedge, but I make sure I have my stops in place, and my stops are in place above 132. They're up here ish. Just letting you know. Um, okay, let's go over to support. Support will be obviously 131. I gotta cruise through this stuff, guys. I'm running really late now because we had way too much fun. Let's go over to the Swissy. All right, here's the Swissy. 95, 95.60 or 97.60. Okay, and support. Here, let me get rid of this. Get rid of that. I mean, obviously, I really want to see the Swissy sell off. I mean, we might get a sell off though. The scary thing is with the Swissy, I want a weak number because it'll help my pound, but I want a weak number so I could buy the Swissy down here. The problem with that is if the Swissy drops to 96 and gold breaks above 1400, if gold breaks above 1400, then what that does is that's going to really impact the dollar negatively longer term. So anyway, let's see here. 97.60 is resistance. We're in a range, and support. I know we drew that yesterday. We drew that this trend line that looked like this yesterday. All it would do is if we got all the way back down here and just take it back to trend low. So I don't know if that's going to be much of an. I don't think that's really going to stop us today. Today it's probably more like this. So 97. It's not too far away. I'm gonna write down. Hold on. What is this? 96.35. All right. So here's the dollar yen. 102, 102, and then 170. Because if we plow through this 170, you guys know that's going to be very dangerous. Okay, that's important support. Resistance 102. Let me do the Canadian really quick. I can do that really fast. Oh, this is bearish. Sorry. We are definitely in a bearish trend. And on a weak number, as you guys know, I think we're heading down here to 98. All right, let's go over to Canadian. Okay, here's Canadian. So here's Canadian, and let's see here. 130, as you guys remember from yesterday, very big support. This is also trendline support. We're probing. Now, we do have Canadian jobs report too. And by the way, Canada is expected to create, I think it create 1,000 jobs, right? Oh, actually, no, Canada's expected to, create 10,000 jobs. So that's a pretty lofty number for Canada. Hold on, let me look at the chart. Ooh, that's a pretty lofty number for Canada. I wouldn't be surprised if the Canadian jobs report misses, and if it does, that will bounce obviously. But if we break 130, it's dangerous. Okay. Okay. If we break 130 on a strong jobs report, and we break through that, obviously it's very dangerous. Resistance now for the Canadian. I would say it's way up here at 130, 140, but we'll stop before then today. I don't know. I mean, if we have a strong U.S. jobs report and a weak Canadian report, we can end up at 130, 140. I mean, that's not. I don't think that's unheard of on a day like today. But what we actually have to pay attention to is, let's say we break 130. Because if we break 130, where are we going to go? Because if you look at this longer term formation of the Canadian, this is a pennant, right? I mean, roughly, I can just be kind of, roughly draw this. If we break down, this is not good for the dollar Canadian. It is not. That would not be good for the dollar Canadian. All right. So hold on. Let me check something else. Oh, look, I'm using a Fibonacci, for crying out loud. 618, 786 comes in at 129.44, and then we have 128.60 down here. So 129.50. Let's just say we do break 129.50. Okay. All right. So let's and by the way, the dollar Canadian is walking a very fine line today, because if it does break 130, that's going to be extremely dangerous. All right, guys, I'll be back in a few moments. All right, and when I come back, we will do the Aussie, Kiwi, dollar index, peso, all that fun stuff. I'll be right back. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. Let's go ahead and we really have to get through this stuff. Ah, crap, hold on, I gotta. Um, Sorry, a buddy that was asking me about non-farm payroll today. Okay, so let's go over to the charts, and let's do the Kiwi. All right, so here we are on the Kiwi dollar, and yeah, hoping for a head and shoulder pattern. I don't know if we're going to get one here. Let's remove all this crap really quick. And by the way, I am not short the Kiwi. Actually, the only dollar trade I have right now is short the pound dollar. Just, I know most of you know that, but I guess we could. This still could be. This still could be a. My charts are paused. Sorry. Thank you. Sorry, Kev. Sorry about that. All right. Thanks. Thank you. Sorry about that. My bad. And whenever Kip chimes in, I know exactly what it is. All right. So the Kiwi actually is performing pretty damn good today, and I'm not too sure why, but it is performing well. Probably because risk appetite's a little stronger, I guess. And the Kiwi's been getting beat up the last few days, so I should say that, relatively speaking to the Aussie, it's been getting beat up for the last few days. So it's doing a bit of a recovery. Let me get rid of this. 72.55 will be resistance. 71.50 is support. We're right in the middle of this range, which makes sense. Here, let me get rid of that. Makes sense ahead of NFP. So 71.40, 72.55. I don't see any reason to do anything with it right now. So 71.50. 72.55, and we are in the range, and we're smack dab in the middle of the range. Let's go over to the Aussie. So here's the Aussie. Okay, I drew this out yesterday, and I was thinking about this because we're on the Lunch Money webinar, and I was like, okay, well, we're approaching resistance, which we are. But how about if we hit new highs? Do you guys see, let's take away this blue line really quick, and this is what I was drawing yesterday, and let's get rid of this. Okay, now you guys know I've had this triangle drawn out here on the Aussie dollar for, you guys guess how long. I mean, it's probably been what, a month and a half maybe. that we've been looking at this triangle consolidation. So what if, and think about this, and I did this yesterday on the Lunch Money webinar. I said, what if we actually break new highs, which is right here, right? And we actually hit new highs, and then we hit the trend line that most people aren't looking at, or maybe they're so many people are probably focused on this, like all the short-term traders are like, dude, if we break out here, we're breaking out, right? So if we break out above resistance, we're breaking out. What they might not be looking at is the downsloping trend line that comes in and intersects just above that at 77.10. So now I say 77.10 because that's where it comes in, but I bet you that's 127% extension. Oh, look, I'm using a fib. Well, it's one of the 3 things that I use for the last 13 years on this webinar: trend lines and fibs and RSI. Oh my God. Okay, so here we are, 77.10. Wait, Blake, you use Fibonacci's, trend lines, and RSI? And you've been doing that for the last 13 years on live broadcasts? That's right. That's what I'm doing. All right, so 77.10 would be resistance. That's trend line resistance. It's huge. Now you might be thinking, oh man, but the Aussie's so bullish. I still think we're in a range. We're in a range until we break out of here, out of this triangle. We're in a range, okay? Let's go over to the support. Let's figure out where support is. This trend line support will come in right here at 75.80. Okay. Come on, pound, come down. I'm happy this pound's coming down a little bit. You know what I'm thinking about doing? I'm thinking about just taking some of it off and just keeping us. Screw it. I have my stops in. I'm not dealing with it. All right, let's go over to the dollar index. All right. Here's the dollar index. We're obviously trapped between. Now we went as high yesterday at 95.90, but I think we wrote down 95.85. Correct me if I'm wrong. Yesterday, I think we wrote down 95.85. Sanjeev said, Blake, please make it more complicated. These 3 things can't work. I know. Trend lines, fibs, and RSIs. 95.80. 95.80. Support 95.03. Or 95. That's it. We're in a range. If we break above the highs, at that point in time it's risk off. Doesn't matter what does not matter what the dollar is doing. Okay, when we have the NFP, kind of disregard the peso. The peso is going to be on its own program. It's total risk on, risk off. So if we break above 19, it is risk off. The market's gone risk off, so we're going this way. And if it breaks down, that means the stock market's rallying, which, in all actuality, that probably means this is happening. And then one of the other things about the peso you can think about, if it does indeed break down, if it's a weak number and stocks are rallying, that's double the confirmation that this thing should be going down, right? Because then you have a weak jobs report. Stocks like the fact that there's a weak jobs report. Stocks like the fact that there's a weak jobs report and the stock market rallies. As stupid as it sounds, then we break down. All right, let's go over to the Norwegian krona. Same, 840 to 850. Same. Swedish krona, 840 to 874, and we're smack dab in the middle here. And by the way, as much as I want to buy the U.S. dollar Swedish krona, it does scare me because if we do have a weak number, we're probably going to come down because, look, this is the most obvious range ever. So if we have a weak number, we can come right back down towards 8, and especially if gold breaks out. Just simple stuff here, guys, but just keep in mind what we're dealing with. 840. And the Swedish krona, there's no reason to be buying or selling it right now, in my opinion. From a risk-reward standpoint, there's just no edge because you're stuck right in the middle. I mean, literally right in the middle of this, not the red range. You can see the red range. Red range. We're right in the middle here. There's no reason to be buying or selling here. And then as much as I want to be long, I'm scared that that the number comes in weak and we can't take it out. Now, going back to gold, which obviously I copied this chart, so let's go back to gold here. This is probably the chart that we really need to pay close attention to. I know I will be looking at the yen during the NFP because we're going to see instant reaction of what happens. But keep your eye on gold because if gold turns lower, that means the dollar is going to strengthen. If gold breaks out, that means the dollar is going to weaken substantially. And by the way, if gold breaks out above 18 or 1380, this resistance up here, 1380, whatever it is, we break above that. You guys know I'm actually going to start shorting dollars and probably across the board. Okay. All right. All right. Bruno says, Blake, I thought you did sorcery. What the heck am I doing here listening to a fib using mortal like you? I don't know, man. I just do the basic stuff. It's just, you guys make it so complicated. You just make it so complicated. All right. Let me see. Let's talk. Let me answer a couple questions really quick. Like questions, not like, I know we were all laughing about earlier stuff, but let's actually talk about questions here. Jay, good morning. Patrick says, good morning. Happy Non-Farm Friday. TGIF. Stephen S says, good morning, Blake. Weak jobs report. ADP was pretty solid. Remember trying to anticipate a number with plus or minus 100 standard deviation error. Yeah, I mean, look, I'm just trying to put the pieces together. And ADP private sector, it did have a solid jobs report. And by the way, the employment component of the services was okay. It wasn't like bad. I mean, it came in a little worse than expected. But I know it came in a little weaker. But here's the thing: if we would have had a weak ADP non-farm and an ADP, excuse me, and the employment components of both the ISMs were extremely weak, I'd be very nervous about holding the pound dollar short. I am holding the pound dollar short right now, and I'm only up like 14 pips. I'm sitting in it because I'm comfortable in it because it's the pound, and I know the pound while it's below one 32 is bearish. Okay, but I don't mind getting out for a loss either. I don't mind. I mean, I would mind. I mean, it's not going to feel good, but getting out for a loss. But I'm more bearish the cable. And if you don't want to be short the I gotta tell you this too. If you don't want to be short the pound dollar because you're like, well, I don't want to have any dollar exposure. If we have a weak jobs report, can I tell you the currency that I'm probably gonna buy on a weak jobs report? You guys want to know? Try to take a guess. I got 2 minutes. Take a guess. Amanda, you're correct. If what I'm going to buy on a weak jobs report. Did I already give you guys the answer? Did I give you guys the answer already? uh, uh, I did. Did I give you the answer? Damn it, I did. Okay, the euro pound. Okay, so I was like, dang, you guys are all getting it right. How'd you guys all get it right? Look, if we have a strong jobs report, I'm bearish the cable, right? If we get a strong jobs report, I'm bearish the cable as it is. I don't want to buy the pound dollar because it's the pound dollar. I really, really, really would rather just buy the euro pound because if gold goes up, I know the euro is going to go higher. I don't think the pound's going to go higher, so I'm just going to buy the euro pound. Right, on a weak jobs report. I know it's not orthodox. It's not what most people would say. Oh, we had a weak jobs report. Let's short the dollar. No, one of the things that I really want to do is I want to buy the euro pound. Like, where's my freaking pens? Damn, the kids come by here and they always steal my pens. They stole all of my pens again. Oh no, there's one. Okay. I swear, I leave like 5 pens on my desk, and I get up in the morning and there's no pens. Like, how does that happen? Every freaking time. Yeah. Euro pound. Long. I'm writing this down. On week report. Ricardo, I got to read this before we go. This is Ricardo from our chat room. He goes, "Hey Blake, I just would like to make a short statement if you allow me. I've been in the markets for over 20 years next year and trade for a living. Seen a lot of traders, analysts, and corporates. Joined Morning Edge about a year ago and would say that this free webinar with your style is one of the completest shows I've ever met. Ricardo's in Argentina, by the way, where new and young traders can learn a lot, not only about technical insights, but also risk management and some fundamentals with a clear way of explaining things for those how have the English language, even for those how their English language is not their main language, still a perfect and clear understanding. I would recommend that people also join the chat room, which is paid, but worth it. I also think important to mention that you have a clear way to trade as you mainly look for small pips with managing great risk. As you know, I'm fighting with one of my kids' health, so I maybe will be out for a while from the chat room. Always a pleasure, sir. And that comes from Ricardo. And Ricardo in the chat room, thank you, Ricardo. I appreciate your comments. And by the way, your efforts don't go unnoticed because you post some really great charts out there. So and for all of us to see. So thank you very much. And it's thank you for the comments. Really appreciate that. Hey guys, listen, we're going into the NFP. I'm going to go grab some more coffee while I can. I'll see you back here in about 5 minutes, and then we've got it. We're going into it. Thanks everyone. Be right back.